Welcome to the Deep Dive, where we cut through the noise to get you informed fast. Today, we're diving into a sector that's been on, well, an absolute roller coaster. Fintech. Financial technology, I mean, we all saw it, right? The huge climb during the pandemic.
Oh, yeah, meteoric.
Then that sharp drop in the 2022 bear market. And now we're seeing some really interesting signs, maybe a powerful rebound.
It feels like more than just a rebound, actually. There are some fundamental shifts happening that are creating this new landscape. So our mission today really is to unpack this current fintech rally, what forces are actually pushing it forward. And then we want to spotlight two specific companies that, well, our sources are highlighting. They talk about potential multi-bagging returns.
Right.
The goal here is basically to give you a shortcut, understand what's really driving the innovation and opportunity right now, give you something actionable.
Okay, let's get into that. What are these driving factors? What's making the ground so fertile, you could say? Our sources seem to point to a few key things. First, it's this ongoing, relentless shift, isn't it? Digital payments just keep grabbing market share from, the old ways.
Absolutely.
Yeah.
People are just interacting with money differently now.
And second, there's the escalating role of AI in fintech. That seems huge. AI is really reshaping how financial services even operate.
Definitely. And third, there's this broader risk-on sentiment that seems to have come back into the markets. Global economic uncertainties have maybe eased off a bit. Capital markets opened up.
Yeah.
These conditions are really setting the stage.
Okay. So within that environment, two companies are standing out in the research you looked at.
Exactly. We're talking about Upstart Holdings and Sezzle. Our sources frame them as particularly compelling examples of this rebound, potentially delivering, like I said, those multi-bagging returns for investors.
Multi-bagging returns.
Okay, just quickly for anyone less familiar, that's basically investing slang, right? An asset that could return multiple times what you put in.
Yeah, 2, 5, maybe even 10 times your investment, potentially.
That does sound interesting. But okay, beyond just the general market getting better, what specific things about their strategies make these two stand out for that kind of growth? Why not just any fintech bouncing back?
That's exactly what we need to dig into. So for each one, we'll look at their past performance, the unique challenges they faced, and they definitely faced some, how they navigated those, the strategic fixes they made, and then obviously where they stand now and what the future might hold.
Okay, great. With those driving forces set, let's zoom in on Upstart Holdings first. This company really seems to embody that story, right? Resilience, strategic pivot. If fintech was a play, Upstart's like the tragic hero. Rose so high during the pandemic.
Oh, absolutely. Sky high.
Only to have this dramatic fall when interest rates started climbing. Demand for loans just poof, vanished. Yeah, dried up, profits disappeared. The stock was, pretty much forgotten for a while there.
So what's fascinating now is how they didn't just cling on. They seem to have fundamentally changed their approach.
They really did. They've genuinely improved their underlying tech, developed better AI models, and that's led to significantly higher loan conversion rates, even when things were tough. Our sources really highlight the benefit of their newer, more advanced model called Model 18.
Model 18. Okay, what is that exactly? Is it just a slightly better algorithm, or is it fundamentally different?
It's much more than just fancier. Model 18 is this sophisticated, adaptive AI. It's constantly learning from millions of data points, way beyond just traditional credit scores. It's their latest version, designed to, accurately assess borrower risk, even when the whole economy is volatile. This isn't just a small tweak. Our sources are saying it actually doubled their transaction volume to, let me check the number, 240,706 transactions.
Doubled, wow.
Yeah. Unlike the old credit models that kind of break under economic stress, Model 18's adaptive AI lets Upstart price risk accurately and approve loans even when rates are high. It turns what looked like a weakness into a real competitive advantage that, frankly, traditional lenders just can't replicate easily.
Okay.
Plus, they've shored up their capital with new funding, streamlined the business, and now they expect to be profitable again this year.
That's a pretty bold claim about the AI's adaptability. But, given how badly Upstart struggled with rates before, how much of this is really a tech leap versus just, the market getting a bit better and making their model look good again?
It's definitely a mix, but the tech leap seems significant. I mean, doubling transaction volume with a better model while lots of traditional lenders were still pulling back during rate hikes. That says something.
Yes, fair point.
And they're not stopping there. Upstart is now aggressively pushing into huge new loan markets. Auto and home loans are continuing to roll these out in new states. But despite all this, the stock price. It doesn't seem to fully reflect the business strength yet. It's up recently, sure, but still down, roughly 80% from its peak in 2021. Market cap is sitting around $7 to $8 billion.
Okay, that raises a key question. For a company going after such massive markets, trying to disrupt FICO scores, Upstart could be much bigger than $7 billion. How well are they actually turning that AI power into, dollars and cents, revenue and profit?
Very efficiently, it seems. Even with current interest rates, the business is doing well. First quarter revenue was up 67% to $213 million. Fee revenue climbed 34% to $185 million. And get this, a 97.05% gross margin.
97%, that's incredibly high.
It's really impressive. It means for almost every dollar in fees they earn, nearly all of it is available to cover their operating costs. It just showcases how efficient and scalable this AI-driven platform is compared to old school lending with lots of people involved.
Wow.
If they keep this momentum going, the potential upside from here looks, considerable, especially if rates were to drop again, which would likely boost loan demand even more.
Okay, right. Let's switch gears then. Our second company, Sezzle. Like Upstart, buy now, pay later, BNPL companies also had that huge pandemic moment, didn't they?
Absolutely soared. Demand for that payment method just took off.
But then, same story. Interest faded in the 2022 bear market.
Right. But BNPL definitely hasn't disappeared. And Sezzle is actually one of the fastest growing players in that space right now.
Yeah.
What makes them different, really, is their core strategy. A lot of competitors focus heavily on the merchant side, right? Getting shops to offer their service. Sezzle has uniquely prioritized the consumer. They've built their business through things like subscription programs, decent rewards, and even cool new features like auto-couponing.
Auto-couponing, what's that?
It automatically finds discounts for customers while they're shopping online. Pretty neat.
Huh. Okay, so that consumer-first angle seems to be working for them.
It really does. Their growth rate has accelerated into triple digits. First quarter numbers, revenue up 123% to $104.9 million. And their GMV, that's growth merchandise volume, basically the total value of stuff bought through their platform, was up 64.1% to $808.7 million.
Those are strong numbers, no doubt. But the BNPL space, it's had its share of problems with credit risk, right? Even big players stumbled. So what has Sezzle done, maybe even unpopular stuff, to manage that risk so well? And can they keep it up if the economy turns sour again?
That's a crucial point, and it highlights another unique strength for Sezzle. What's also fascinating is how their profit margins have climbed right alongside that growth. The company reported an operating margin of nearly 50%.
50? Wow. Again, very high for that sector.
It really shows how scalable their model is. And on risk. They've implemented really rigorous credit risk management. They're swift about cutting off customers from the product if they miss even one payment.
Ah, okay. Strict.
Very strict. Maybe not popular with everyone, but it keeps their loan book healthy. And look, despite the stock already surging over 800% in the past year.
100%.
Yeah. With a market cap now around $4.5 to $5 billion, our sources suggest it could still easily be a multi-bagger from here.
Yeah.
Because BNPL is just this massive market, right? Competing directly with credit cards. There's still so much room to grow, especially if they stick to that disciplined approach.
Okay. So let's bring this together for the listener. We've looked at two really interesting journeys today, both showing remarkable resilience, strategic adaptation in fintech. What do you think is the single most important lesson from Upstart's comeback story?
For Upstart, I think it has to be the undeniable power of that adaptive AI model. How it can overcome even really tough macroeconomic conditions. They didn't just hang on, they evolved. It proves that maybe traditional valuation metrics don't fully capture the potential of these, next-gen financial disruptors. Their ability to price risk using AI, even when rates were climbing, that's a game changer.
Right. And for Sezzle, what's the key takeaway from their success in that super competitive BNPL space?
Sezzle's story really highlights the lasting value of a genuine consumer-first approach, even in a business that feels very transactional. By building that deep customer loyalty with unique features, subscriptions, rewards, and mixing it with disciplined risk management, they found profitability where others really struggle. They've kind of turned buy now, pay later into this sticky, ongoing relationship that actually works for both sides.
Yeah, that makes sense. And if we connect these individual stories back to the bigger picture, they really do showcase the adaptability, the disruptive potential still humming away in fintech.
Exactly.
They're great examples of how digital payments keep evolving and how AI is weaving itself deeper into finance, creating new ways to grow and be more efficient.
Yeah, and it really encourages you, the listener, to think about what these case studies reveal about innovation, risk, opportunity. especially in an economy that's changing so fast. How might these shifts affect your own, financial life or how you see things? It's such a dynamic space, impacts everyone.
Indeed. Which leads to a final thought to maybe chew on. As digital payments keep climbing and AI keeps reshaping how we deal with money, what might be the next big thing? The next frontier of financial disruption that could emerge from these trends? And how might that change the way we think about borrowing or spending or even saving? Something to ponder until our next deep dive.